Good afternoon. Can you explain us a bit more about your investment process?
Sure. So I manage a currency fund, and it's fundamentally based. We're value-based investors. We make estimates of what equilibrium is for exchange rates. We look at all of the factors that influence those: macroeconomic policy, fiscal monetary policy, political risks, global risks, and then we see if where exchange rates are actually trading are significantly from where we think they ought to be. And if that's the case, we have an investment opportunity, and we will take a degree of currency risk depending on the degree of investment opportunity that we perceive there.
What are your most favorite factors for this process?
Well, the foundation of it is value in currencies. So we start off by estimating what is equilibrium for currencies. Can we have a good idea of what equilibrium is? That's the first point. The second point will be looking at all of the influences on currencies, so particularly relative growth rates, interest rates, fiscal policy, terms of trade, other geopolitical risks. And then we'll make an estimate of where the exchange rate ought to be trading relative to its long-term equilibrium. And as I say, what we're looking for are instances where the actual market exchange rate is a long way from where we think the fair value rate is. And that then gives us an opportunity. So for instance, at the moment, we think that the Scandinavian currencies seem excessively cheap. That's not justified by fundamental analysis. So we have overweight positions in the Scandinavian currencies. When we look at the US dollar, for example, we recognize that the dollar is supported by various factors: superior growth rates, superior interest rates. It's also a bit of a safety first currency. But even after having taken all of that into account, we still think the dollar is stronger than it is justifiably would be. So we have an underweight position in US dollars, just to give you some examples.
Do you analyze all currencies worldwide?
We examine all currencies. We will take positions in the currencies, firstly, if we think we understand the drivers sufficiently, and secondly, if there is an investment opportunity there. In the past, we've taken positions in up to 33 different currencies, but at any one point in time, we perhaps have overweight positions in maybe something like 6 to 8 currencies, and underweight positions in 6 to 8 currencies.
And do you also experience some liquidity problems, for example, with frontier markets or emerging markets? If the currency seems very cheap, but if the liquidity is very low, it could be a problem, of course?
No, we don't find liquidity problems. We will examine liquidity. Currencies is the most liquid asset class out there. If a currency is less liquid, that would tend to make us more cautious about taking on any position in there. So all of the positions we have on there are ones that can be easily changed very quickly.
What's your view about all these new currency things like the Bitcoin, etc.? Is that a threat for the traditional currency markets?
I think Bitcoin is very much like gold and other precious metals. We don't take positions in Bitcoin or any of the other cryptocurrencies. We don't take positions in gold either. I certainly don't think it's a threat at the present because governments collect their taxes in the currencies in which we trade, and therefore there's a sort of official status to currencies like the dollar and the euro and the pound, which Bitcoin doesn't have at the moment.
With the extreme negative or low interest rates, don't you fear that maybe too much money goes to the emerging markets when interest rates are higher there, and that could blow up some local currencies?
On the contrary, emerging market currencies at the moment seem to be on the cheap side, or fair value versus the dollar. We think the Latin American currencies at the moment in general are undervalued versus the dollar, despite the fact that they have higher interest rates than the dollar. And if you look in Asia, we think they're roughly fairly valued versus the US dollar. There may be one or two pockets of opportunity in EMEA currencies, but for a lot of these currencies, because they're risky, we require very high expected returns before actually investing in that asset class. And so at the moment, we don't have positions in those currencies.
Can you say something about your historical performances?
Yes, we've been running standalone currency strategies since 2005, and we've had average performance of about 7.1% per year since that period. So that's about the same performance as you have from equity markets.
Why would investors add currencies to their portfolios?
The main advantage is that the return profile of our currency strategy is very different from equities and other risk assets. It is a genuine diversifier. We've had negative correlations with equities for much of the period, and the correlation has stayed consistently low. So when you add it to equities, you actually get better overall portfolio performance. Your risk tends to go down with no adverse impact on the return.
Okay. Thanks for the interview.
You're very welcome.